The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hello, folks. Basil Chapman, Tiger Technicians Hour. Dow's up 185 at 60,577. S&P is up 22 at 19,039. Let me move this away so that I can see the rest of the numbers. That was a 10-minute chart. Comp index is up 49 at 4,553. The VIX went under 20 and is now at 19.79. To me, that spells buying pressure. That's great. That's what you want to see. Must remain under 20, back into the 22s. So there's a little problem. What's at 22? 22.00. 19.36.50 is the S&P, the E-mini. Very nice action here. Leg B trying to challenge the left side 1940 high. And what did it do today? The high was 1943.00. Round number. Got to watch that closely. Let's see the 120-minute chart. Only leg C. There should still be a D, so a high to come in the E-mini. Let's go on to the QQQ series. So you got the Qs at 102.84 up $1.21. Nice action, not great. And one of the problems is the IBB, the biotech iShares. And I had a question about this, and I'll do it real quickly. The reason why I didn't want to get out of our short position from the 393.10 area way back July the 7th or something like that of last year is even though it hit 200, what was the low? 240.03 on the week of the 12th of Feb. Even though it went to that number, and my target has been to the 228 to 222s, that's number one. Number two is the sell signal that I got is a major sell signal. It's not just a short-term sell signal, and it suggests very strongly that the biotech sector could have very strong rallies. But within that context, the tide of the monthly chart based on the MACD, look at that. That's a very poor MACD action right there. Look, it's still expanding the histogram, and the stochastic is still very negative. And finally, the unbalanced volume turned down. Everything's turning down. So I do expect, based on the weekly and the daily, that you can have bounces. And we try to play those bounces and take profits and get out on the long side while keeping the core short position. There's a long-term short position, a major sell signal, which says time and price. And that's different to a shorter term. So that's the question. And it's impacting the Qs right now because the QQQ is not up as much as it should be. Look at this QQQ series. Trading at, what did I say, 102.84. It's up $1.19. Actually, it's the same as the Dow. Dow's up 1.14%, I should say, 1.2%. The Dow is at 1.14, S&P is 1.17%. So actually it's hanging in quite nicely. But I do think that the Qs are being impacted by the number of biotechs within it. Okay, real quickly, let's just run these now. You've got, then we'll go to our callers. You've got, I'll just show it here, the VIX index. Very important. Did a study for my subscribers and analyzing it all and suggesting that the tide is going down in the shorter term. We'll watch that monthly chart because that's going to be very important, but certainly daily and weekly. And the VIX suggests that 1899, the 200-period exponential moving average, is going to become even more important if it gets there. The next thing I want to do is just quickly, gold down $18, $19 at 12.12. It looks like it's got an H pattern right there, and all it's going to do is try to test the left side low of the 16th of February of 1191.50. If it closes decisively under that, it'll look like a 1, A to B equals C to D to the downside, the classic lightning bolt. Then you can expect 1178 to be hit. Let's go on, and we're going to go quickly to the silver. Silver is down 1.17 and 15.20. There's that candle, that Roman candle. We're going to watch this real closely. But it looks like silver's playing a little bit of catch up to gold, but it's still not a great chart. And now what I want to look at is the TLT, still down. Yeah, it's only down 10 cents at 130.91. I just think that yields are going to go down longer term. This is the Japanese normalization of our bond yields, and that you've got just a kind of a trading thing here with yields popping up and down within the context of going lower. That's that. And then the dollar, of course, very important. The dollar right now had a very nice earlier session, up 76 cents at 97.35. Earlier, it went all the way to 97, 97.60. If the dollar gets all the way to the 98 to 98.50, something else is going on, and I suspect that this counter rally in the market will go on a lot longer. And I just want to do one more thing. Look at high-grade copper. High-grade copper's had a real nice session, and as a result, it is at 2.118, up 0.04. Nice. I think it's going to go to leg D above 2138, the high of the 4th of February. So far, it's nice action. It's not great. I mean, that monthly chart looks terrible. So let's go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm good, thank you.
Good. Hey, so just a couple questions for you. I bought Alcoa some calls in anticipation of a leg D last Thursday near the lows. Unfortunately, I didn't wait till Friday because it got a lot lower than that. Not a lot lower, but a little bit lower. And it looks like it's made its D today. And I'm wondering what your thoughts are. I'm wondering, it also looks like it potentially is doing a 1-to-1 up, which could put it to like 930, 940-ish. Let me know what you think.
So the question was, well, two questions. One is, what do I think? But the other question that I have actually is, so you held it on the dip and you bought it on the dip and you were expecting a higher high. And
Correct.
You've got it.
I bought it Thursday when some calls when it was trading around 8:15.
Excellent.
And then Friday it went all the way down to
784.
784, and I was holding my breath a little bit on those, but I was really expecting a D. And
now you've got a beautiful trade. Except
Yeah,
I got to break some news to you.
Right.
I remember when I first started my Chapman wave notation here at TFNN, and every once in a while I get someone saying thank you so much, and we got a fantastic trade, and then they mentioned the letter that they were looking at, and then when I did the study, I don't know how they got to it. They got the right result, but the wrong way. And I always used to chuckle and say, well, those are the people that have had a good result. I hope that when it doesn't work out, that they go back and analyze it. Let me just explain something to you. It's worth taking the moment to clarify. I happen to be in leg E.
E. So
I knew that was coming from you.
I'm starting from the 20th of January.
You're starting from the low of $6.14. Now, let me explain something. For a long time, I've made a big deal about this, but I can't do it every single day because some people listen a lot and some people rarely listening, or when they do. So you never know what to repeat because you sound like a broken record, but you never know in radio or TV when anybody's going to be listening. The move that went very quickly from $6.14 to $7.42, the high of the 22nd is an A.
Right.
But look what happened. It pulled back the next day. This is Alcoa, folks. We're looking at AA as a symbol. It pulls back on the 25th, and it goes to $6.76. Then it starts another rally, and it goes to $7.28 before pulling back, but holding very nicely. So that's an A, but it's subservient to the one on the left side. But then look what happened. It took it out on the 1st of Feb. So I'm going to come back. That's a B.
Oh, I see.
So let me come back, and I'll talk about it because that's why I'm at E. I'll be right back. I'll be back with Mark in Denver looking at Alcoa.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're back with Mark in Denver. We're looking at Alcoa, and we're looking at the Chapman Wave notation. And from the low bar, this is the way it works. From the low bar, your most obvious low bar, you immediately count each successively higher peak. But that's the obligation, every peak. And that means that the peak that was made on the 22nd of January at $7.42 had a buy mode or buy signal that went to a peak A. I usually call it a gray A. I'll make it a gray, and a gray B. And that was with the high of the 1st of February of 738 underneath the previous high of 742. That's the one you missed. Remember, your obligation is to count each peak, and if there are peaks within a previous left side high, you've got to count them. I've also started to count. The only change I've made to my CD that I made way back 7 years or 8 years ago is that let's just imagine that the low of the 28th of January was lower than the low of the 25th. It went below 676. I've been working a lot over the last year, maybe year and a half, and I'm finding that I need to count that as well, that would still be a B. I wouldn't restart and make that an A. Why? Because the low of 6.14 was so powerful. That was the low. So that it's each successively higher high that I'm counting. So the moment that $7.42 was taken out on the 3rd of February, that became new leg C. And the objective in the Chapman Wave is to keep the floating letter, that's the C right there, on the 23rd, on the 20th, I think that's 24th, on the 4th of February, that's still leg C. On the 5th of February, that's still leg C. But all of a sudden, on the 8th, there's a lower high of 842 instead of 788, and that becomes a peak C. Now the objective, it would be great if I could just say every time that when you get a buy mode, you're going to be able to trade it all the way to D. But sometimes the pullbacks are very sharp, even though it gets to a D, which is the objective, the 4th highest peak. So the peak that you thought was C at 860 on the 17th was really D. Now, what does that say? That says that within the context of your buy, of putting on your position of the calls, would you have put that on expecting an E? That's the question.
No.
Do you understand? That's why over the years, I can't explain it. I can just say, wow, thank goodness it was a successful trade because it didn't do. That's where I'm usually a little bit cautious,
Right.
but I think you did exactly the right thing based on look at the strength of the MACD. Stochastic didn't give you that greater clue, but the way that fast-moving average, the 9-period differential of the MACD, the moving average convergence divergence is so strong. That's why you've got a fabulous trade right there.
Okay.
So now it means that the weekly chart has gone to a leg B. It failed at every other peak B for the last 6-7 months. Will this one pull back modestly when it makes its peak B and then go on to a C? That is a really big question. Based on the stochastic and the MACD, all I can say is I have to base it on the breakout of the wedge formation in the daily chart. And the daily chart is acting so strong, and the 120-minute chart is only in leg C now. I must make sure that I'm not just speaking out of turn. Yep, it's only in leg C. So far, I think you've got a wonderful trade, and you got in a beautiful position. So I don't know how many you've got, but I also think.
I'll tell you what I did. I took off about a little over half of my position.
Oh, good. Okay.
Gave me all this morning, and it gave me all my money back plus some profit. And now
so
I'm
now you're trading with the casino's money.
Yeah, so I'm looking. If it does a 1-to-1 up, it looks like it's going to make it to around 930, 940. But let me know if you don't think that's correct, because
the gap that we're looking at is 902 on the upside on the 6th of January, and the low of the 5th was 916. But I can suggest to you that if it gets anywhere into the 920s this week, then that 980 200-period exponential moving average, which it hasn't even touched. Oh my goodness, look at this. It hasn't even gotten close to. Since it broke down a year ago, on the 25th of February, 2015, $15.70 was the high, 14.85 was the low, closed at round number 15. It broke the 200-period moving average. And I even wrote here when someone asked me about it in the den, I said it has to hold 1280s. And that was, I think, somewhere around May. And it failed, and it just kept going down. Oh, I think you've got yourself something that's really interesting, and that's one of the reasons why I don't want to get carried away, but I do want to say there is just a chance that if this rotational correction and rotational recession that I'm talking about, if that continues to work, and if the dollar actually shows more strength instead of suddenly turning down and breaking 92 to 90 support over the next 3-4 weeks, there's a chance that this rally could be stronger, and the next big pullback is really a pullback to test the major support levels of either January or August in the different indices rather than collapsing completely. If you think about it, Alcoa's had it's gone from the almost 18 area down to 6. That is a major correction. If you think of Netflix, I'm just going to jump around for a moment here to show you something. Netflix has gone from 133.27 to the most recent low of, let's call it 80. Well, 80, that's 50 points. That's a third. That is, we've seen some major damage. Now we're looking at time that's going to take time in some of the real big caps, but the stocks that have had their biggest move to the downside could in fact have a little bit more of a bounce than people would imagine. So I love the fact that you did it correctly. I love the fact that you made a little mistake, but the waveform managed to save you. And the other thing is that you're taking your profits and now you're playing with the house's money. But my suspicion, is this March or April?
I've actually only gone out a couple of weeks, so I've got I only have until the end of next week. So
okay. All right. Well, you know exactly what to do. You're doing it correct now. I think if anything's going to happen, this is the week. And I would probably say to you, you don't really want to be hanging on too long. If it starts to fail and it can't get above $9.10, $9.15 in the next day or two.
Okay, that's great. And when you have a chance, can you look at the XLE? I think it's going to make a D as well, but I just didn't know what your thoughts are on that.
All right, so we've got a break coming up, and I'm going to do some work during the break. Hey, Mark, congratulations. I'll do some work on the XLE during the break. I'll talk about it when we get back.
Okay,
Thank you very much for calling, and congratulations.
Thanks. Bye-bye.
Bye. Mark in Denver, fabulous trade on the Alcoa position. And in a way, it was a little bit of a mistake, but it worked out beautifully. Let's see. And remember, your only obligation in the Chapman Wave methodology is to be correct in your count, and that's it. And then then it should unfold in a very systematic way. I'll be back. Dow's up 194 now. Good. S&P's up 23. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back and got the old-fashioned way. We're doing it by telephone here. Just a little problem somewhere or other on the line. Of course, that's the beautiful thing about technology. You got one little dot that can move you away from something very quickly. But anyway, here we are. So let's deal with this in a, let me just move that away and then you don't need it. Okay, microphone gone. All right, so here we are. We're looking at the XLE. A question about it's trading at 58.10. And kind of a little double top here. I don't see it moving all that well just yet. It's got more like the H2 and M pattern, but definitely the support at 58.11 right now. 56.55 is the 9-period moving average support. I have you on Skype. Whoops, oh, he's got me on Skype. Hold on a second. It's one of those things. Let me just get back again. I'll be there. Whoops, sorry, Al. Hunting, got it. Got my earplug. Got my microphone, and we are back. There we are. Is that better? Good. Okay. So I can't hear anything, but let's see. Yep. Okay. Stick with us. Okay. Nice. Let's get rid of that. Gone. Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 199. The XLE, yes, I think it has some upside potential right now. But I need to see it close, not just hit it. It's got to close above 60.20, and it has to do it in the next 2 days. If it's able to do that for the very first time, you've got the MACD crossing positive. It's a bit, first time since way back in October of last year, and that's going to be important because there is a slightly positive stochastic at 31%. I would prefer if the stochastic was at 37%, maybe 42%, but it's okay. So the most important thing is I would rather say, and the question I think Mark asked was, what about the XLE? I'm going to say that the XLE at this particular point it's more important that it holds the support between 56.55 and 56.30 on a closing basis, or I'd even say intraday, but definitely on a closing basis, then what we're looking at is the upside. So let me say the bias right now, based on the MACD, the moving average convergence divergence, and the stochastic, which is not as good as it was before when it made that peak C, I would say has a bias to the upside, but it is a tentative bias to the upside. In other words, I don't want to see this pattern go from an arch formation like that and then fail by going under that whole 56 area. I want to see it turn into an up channel or even the Chapman wave inverted falling axe formation. Let's just think of it more as a channel. And that channel says, great. Now what we've done is we've established that there is a resistance at 58.50 to 58.70, and if it clears that, then all of a sudden you've got the dashed line of the up channel with the 60 to 61.5 area as an upside target. That's the best way that I want to do it. Now, would I buy it right now? I think there are other areas that are actually moving a little bit better, but at this particular point, I'm going to say yes. I think you can start a position. Why? Because if all of a sudden within the S&P Select Energy Spider ETF trading at $58.08, you start to see buying, you've created a base of support between 55 and 57 that should be a really good cushion. And that's going to be if it's able to get above that 59.70, touch 60, and then start to trade nicely in the 60s. So it's a lot of ifs, but at this point, I'd say my bias would be just at least at this moment, I start a small position. I'm not even sure I'd add to it. I'd have a small position. It's not my favorite sector at this point. It could turn out to be, but there are a couple of things that still need to go right. So I had a question earlier on. When I look at TJX. Now, I had the pleasure of meeting a buyer from Home Goods. We were it was a while ago. Thanksgiving or Christmas party. I don't know, one of those parties in the December period. And she worked for Home Goods as a buyer. So she was all over the world. I had a whole long discussion with her about buying. I think I even mentioned it on my show because I think Home Goods is so original and they have so many. My wife loves it. We don't actually ever buy anything there, but we love going through. I go to the food section. They have these odd, crazy things that I should never eat, but they have them there. And of course, she's looking at all the other stuff. Now, what's really important about it is that Home Goods, TJ Maxx, and Marshalls, not one of my favorite places, Marshalls, but I think TJ Maxx has really improved over the years. And she told me about the buying. It is really fascinating. She was telling me about the squeeze, how they get the squeeze from different countries and different places, how they pick it out, the eye that you've got to have, the knowledge that the base is to be. You have to know your product so well, because when you're looking at something, it says sold for $463, but we're offering it for $75.99, whatever it is. You've got to know how to mark down. You've got to know that it's an original product in that sense that you might see it somewhere else, but that'll just be by chance. They have products that, when they all put together, it looks very unique, very clever, nicely designed. Although I have found that the couple that I've been into over the last few months, it's getting a little crowded. I don't know what the reason is for that. But anyway, so TJ Maxx is representing that whole era of specialty buying. I suspect that one of them is doing way, way better. She had told me something about TJ Maxx having a harder time. But not Home Goods. I think that Home Goods was still was a benefactor of the economy at that particular time. So if you look at the chart, it's saying, hey, I'm walking the 9-period exponential moving average in the monthly chart, trading TJX, trading at 72.47, up 88 cents. And so far, I managed to survive all those wicks for the last 4 months, way below the 9-period moving average, and then closed nicely above the 9 EMA moving average. The MACD is not great. It's not bad, but it's just really not great. And all of a sudden, the stochastic is at 65% trying to close. So we have to look at the weekly and the daily. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 200 points. S&P's up 24. Fascinating market. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Island reversal. There it is. All right. So here we go. TJX trading at 72.35, up 76 cents. Questions there. What about it? If you've just started a position, what would you be looking for? I like the fact that you've started a position. If you don't mind, just real quickly, I'm going to the RTH. Yeah, nice. Oh, RTH is looking nice here. ABC leg C for a counter trend bounce. Very nice at 72.54. So, hey, wait, would you buy RTH or would you buy TJ Maxx? Which has the greater upside potential? One is a conglomerate of others, and one is not. So this is ABC. There's a double. You could get a Chapman wave, overlapping wave. All right, so this is what I'm going to do. I'm going to say if you just got in, there's a channel that started, and the channel I'm making it green over there at the top, and the Chapman wave inside wedge has right there, that's pink right there. So this is your resistance area right there. And it's sitting on the resistance area. What you want to see is a break above the trend line. That trend line is so close to the recent high of 73.38. I'm just going to say it needs just over a point right now. I'm going to do 2 things. One is I'm going to look at it as if there's no position. I didn't know that you had a little position. And the other is that there's a peak C. It could be an alternative count G/C. I would have thought that over there at the low in November, but now it's rebounded beautifully. Here's what I'm thinking. I don't see the upside at this particular moment as being very strong unless it can clear the whole area of 73.70s to 74.20. It needs to get there. You can see in the weekly chart, it needs to not just make a leg D, it needs to clear the left side resistance at 74.65. Why? Because the moment it does that, that thin wick of the weekly chart right there says you've already started to participate in a move that is above the wick, halfway of the wick, which would be at 74.28, and there you are already in the 74.70s, which is really good action. Holding there for more than 2 sessions in the week is going to be very good. Why? Because then it makes the top of that candle the attractor. It becomes a magnet at 76.93. Here's what my thinking. I would treat it as a position. I'd actually add to it, even though it's a leg D in the weekly chart, I would actually add to it if it goes 1 penny above 73.38. So 73.39, I'm adding another position. I'm treating the position I've just got as a core position. I'm adding another small. I wouldn't go more than 2 small positions, maybe a third. I'll discuss why. But if TJ Maxx is going to have a really good rally, it's going to have to do it. Nice gap up today at 70 with a doji candle. It's going to have to do it by closing above the high of today of 72.80. I don't care if it does it today or if it does it tomorrow. It must clear 72.80. 72.81, I'm happy. So that's it. On a very short-term basis, I think you got in okay. I would be very careful if by Friday it hasn't rallied very much more and it's starting to pull back and it takes out the low of Friday's candle of 71.70, 70.25. It sounds like a long distance away. 2.5 points in this kind of market, maybe it's not a long distance away. All right, that's the way I'm looking at it. Tentative move you've got in. I'd add to that And then if it's holding very nicely, a Monday, beginning of March, I'd say, okay, I'd add another little bit because it's a very good company and the chart is looking good in the monthly. Okay, I hope that helps you. Not interested if it closes under 71 to 70 support. Goes underneath that, I'm just saying, hey, step aside. There are other stocks. Right. Let us do this now. We've got a break coming up. So before the break, I had a couple of questions. And this is a very good one. I've not looked at the British pound for a long time. So let me just double check, if you don't mind me swinging around here, get the right mouse, otherwise it doesn't make any difference. So Sarah asked about the British pound and euro. What leg down in British pound? They said it hit the lowest level since 2009, and euro, someone today was calling for it to hit 1 with the US dollar. Hey, wow, how rude can they be? All right, let's just look at the British pound. Well, I guess they can. Look, there's that, like a staple, inverted staple. You've gone to a peak. British pound continuous contract went to a peak way back in July of 2014. Recovery high. It was not just a high. It was a 5-year high after this ugly candle of September of 2008. And now it's retesting. You know, this is what's saying to me that I must not ignore the dollar. You know, I'm going to just take a minute here. I wasn't going to do that today. I was going to do it tomorrow. I'm not going to talk. I'll wait on the politics. I'll do that tomorrow or the next day. I do want to talk politics. It's come up to that time where I want to talk politics. Not politics of politics, who to vote for. I'm just saying the politics of politics. So now the British pound really looks like it wants to do a one-to-one to the downside. But let's not get carried away here. This could be a recycle so that it's E/A weekly, F/B, and it's just taken that out. So this could be G/C. I would not be surprised, based on the weekly and the monthly chart patterns, if this arch formation that was formed in the daily with that beautiful doji candle, long-legged doji, and the turnaround, if the British pound actually closes under the low of the 21st of January, 1.4079. Now, does that represent a move that is going to go to 1? I don't want to go out that far. I'm going to rather do the dollar. I was going to wait on this. I was going to do different currencies. You see, the dollar, based on the weekly chart and based on the monthly, by making just by a fraction from 100.39 to 100.51 for leg C and then fading and making peak C, I'm always very nervous when peak C's come about just fractionally above the B. Because what it's saying is I'm running out of steam, I'm making a cup formation, and if I take out halfway of that cup from the bottom of the cup to the lip top, there's a real good chance I'm going to retest the low. So this move in the dollar right now, and the fact that gold, I think gold is holding very well. The gold stocks have been holding very well. See, here we go. Did I just do that again? Yeah. Look at gold. Gold's down 19, almost $20. But I'm watching it real closely, because if gold is able to hold within this area of 1190, what did I say it was? 1181 is really the key support, and it's at 1211. If gold actually takes it out, yes, it could pull back to 1139, and how the dollar acts or reacts in that particular circumstance is going to be really important. So yeah, thank you, Sarah. I'm going to look at the EUR USD right now. And I did look at it earlier on when I did. By the way, for those of you listening now, I did do a show the hour before, the Nadex Trading Hour, with Tommy, and Daryl. I did that because they're at the trade show. Hey, go visit them at the trade show in Manhattan. I wish I was there. I haven't been for a while, but I used to go very often. I planned to do it, but my family come down to me over the last week. They're gone now, but there was just no need to go back to New York. So it's a pity. I would have loved to have met a whole bunch of you. So look at the euro. The euro is showing an Eiffel Tower pattern, gone below the 200-period exponential moving average. I'm suggesting to you the euro at 1.10 could certainly pull back to the 1.08 area this week. Oh, it's worth taking a little time to look at that. I'll be right back. I'll be back to you in a moment. And then, we'll go to Jim in Oldsmore. Jim, if you can hold on, I'll get right back to you in a moment.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Okay, we've got Jim in Oldsmar. Jim, how are you?
Hey, how are you? It's a pleasure talking to you again.
Yes. You'd like to look at?
The SPY.
Okay.
What I've done a couple of months before the big downturn, I had pulled a lot of my retirement money to cash, and I've been watching the S&P 500 slowly kind of creep back up, and I was wondering if it was time to put it back in the S&P 500 or wait till after it gets above the 1950 level. And the second part of the question is, when you look at those 7.5-year charts of the New York Stock Exchange, it still looks really bad there. So would you even suggest I get in right now?
Okay, so this is just a great question. I don't want to give it 2-3 minutes here. You know what I'm going to do? I'm going to make a suggestion. We're already about 1,000 points higher. At this point, it's that whole area between 16,900 in the Dow and 17,000 that's going to be absolutely critical. So since you've got money out, I'm going to make a suggestion that says, let me do this. I'm going to make a note. Tomorrow I will bring it up on my show. It'll be a very important thing because a number of people ask me that exact question. It's a question I ponder all the time. But I am going to make a suggestion, and that says that be prepared to put a little bit of money to work right now. And I'll spend more time tomorrow explaining what I'm looking at and why I'm looking at it. It doesn't have to be right now at 50, at SPY at 1941, or I'm saying 194 something. But be prepared that you might want to you might want to put something there because there's a chance that we might be raising the base of support. Look at this trend line in the monthly chart of the SPY. It's held. It held the very serious decline both in January and in February, and we're above it. And that says to me that even though the MACD and stochastic are very poor, it's price. Price determines the trend, not just the technicals. And the price so far is way off the low, and it's trying to tackle the 200.52 area of the 9-period moving average. So be prepared. And in fact, I'm even going to say to you, why don't you take a little position, and I do mean a little position, and maybe nibble on the SPY. Just get in the position because I want you to be in command. You got out correctly, but sometimes getting back in, you sometimes get back in just about where you got out. And then now, what's the point? So I'm just going to suggest to you, you can either do it now or tomorrow after I discuss a bunch of things that I think might be very important, pertinent to someone exactly like you, is I just have my 1 foot in, and 1 foot in, and you could even put a stop on that. You don't have to put the stop in today. You could have a 4-point stop because from here, if we drop 4 points in the S&P, it's saying, uh-oh, be careful. We could start heading down very soon. So I'm going to say, be prepared to at least step a little bit in. That's why I wanted my clients to get in with a couple of positions, quite a few positions on Thursday and Friday, because there were so many things that said we've had a very serious pullback in a number of the indices. There could be a bounce that's a surprise bounce in that it lasts a lot longer, and so many people are out that it could go on. So I'm just going to suggest, could be today, maybe tomorrow, but if you want to get back a little bit, you could nibble right here and say, hey, I'm in the market. I'm very comfortable with the money I've got out, but at least I'm getting my foot in because that's going to give me a tremendous amount of information that I'm going to need over the next 2 weeks. So, Jim, how about you do that? I'll talk about it tomorrow. Call me if you can, call me Wednesday, and let's discuss what you decide to do and whether I'm correct, because we need to close near the highs or even into the 16,650s in the next 2 days. And to me, that'll be a very positive stance, at least at this particular point. Does that help you a little bit?
Yes, it does. Thank you very much.
Okay, so don't forget, we'll do this together, Jim. Thanks for calling. Folks, stay tuned. You've got your swimming lesson coming up. Great to be here. I'll be back tomorrow morning. Send an email to me if you have any questions. Don't forget, check out my opening call. Be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,